Let us look at the various documents that are being needed in terms of import and export procedure. As a student, you need to know the various documents that are being import and export procedure and what these documents and what are the significance that these documents play. Well, overview of documentation, we are going to learn about the documentation may mean the following: a set of documents provided on paper or online or on digital or analog media such as audio tape or CDs. The process of documenting knowledge as in scientific articles, and the process of providing evidence, the writing of product documentation, such as software documentation, a synonym for the term document and a synonym for the term bibliography. Well, what is the significance of documentation with regarding to import and export? Now, documents are important for the following reasons. A, as an evidence of the shipment and title of goods for obtaining, so you can keep as a proof of obtaining payment because that is your most important document. To provide a specific and complete description of the goods and for assessment of correct duty for clearance purpose and for obtaining export licenses, for obtaining export finance, and also for completing pre-shipment inspection. So documents play an array of significance and importance, especially with regarding to the import and export. There are two types of documents with relating to imports and export. The number one is called commercial. The other one is called regulatory documents. The number one commercial set of documents are those which are mainly used for commerce. In other words, these are documents normally exchanged between buyer and the seller. And then regulatory documents, these are mandatory documents which are being needed, various legal formalities which has to be done. So regulatory documents are required in dealing with various regulatory authorities such as customs, the RBI, because when goods are being imported or exported to a foreign country, there is the exchange of currency, and therefore RBI play a very important role in the role of the currency exchange and payment. Then excise, the central excise and customs. So licensing authorities such as the import-export license, then inspection and other export promotion bodies for availing incentives. These are your commercial documents, and the right side of the screen shows about the regulatory documents. The commercial documents comprise of commercial invoice, that's your normal invoice. It goes by many names. Inspection certificate, insurance certificate covering the insurance of the goods which have been imported or exported. And then bill of landing or AWB. What is AWB? Anybody?
Airway bill.
Airway bill, absolutely right. Thank you so much. And certificate of origin, bill of exchange, and shipment advice. And finally, the packing list. Regulatory documents include shipping bill, ARE1, that is application for remittance under excise 1 from excise, RBI declaration forms, application for remittance of currency, various licenses, and bill of entry. The commercial documents, the principal commercial documents and the auxiliary commercial documents, the supporting documents regarding to commercials. The principal documents are very, very important as they form to become the basis of the documentation process. So we have commercial invoice, inspection certificate, insurance certificate, certificate of origin, that is from which country the goods are being shipped or being imported or exported. The bill of lading, that is nothing but when some goods are being loaded on board of a ship, called the bill of lading, contains all the details. Shipment advice, packing list, and bill of exchange. Now, pro forma invoice is the invoice with regarding to the quantity and quality and the price of the goods. Intimation for inspection, declaration for insurance, application for certificate of origin and mate receipt, shipping order, shipping instructions, and letter to bank for negotiation of document. Then import documents. These are the list of import documents: invoice, packing list, bill of lading, license and authorizations of in original, letter of credit or bank draft wherever necessary, insurance documents, import license, industrial license, test report in case of chemicals, catalog, technical write-up, literature in case of machineries, spares or chemicals as may be applicable, certificate of origin and no commission declaration. So these are the list of import documents that are to be given. Then invoices are often called as bills, and various types of invoices used in international trade are, these are the following terms and terminologies, but all remain the same, but there are different terms which are being used. Well, pro forma invoice, commercial invoice, consular invoice, legalized invoice, and customs invoice. Well, packing list. What comprises of packing list? It is a consolidated statement in a prescribed format detailing how goods are being packed, marked, and numbered, including weight and dimensions of each package. Nowadays, they adapt these barcode systems. The moment you scan the barcode, it will tell you the detailed description of the goods that are being packed into those cartons or boxes. It is useful for customs at the time of examination and warehouse keeper of buyer to maintain inventory record and to effect delivery. It has many details common from invoice, but it does not indicate the unit rate value of the packing list. Customs uses it as a checklist to verify the outgoing cargo in exporting and the incoming cargo in terms of importing. Basic functions of packing list are to confirm the contents of a shipment as it left the exporter's premises, to indicate weights, measures, and the piece count, that is the number of cartons or cases in that particular shipment. The next document is inspection certificate. Certificate of inspection is issued by the inspection agency concerned, certifying that the consignment has been inspected before shipment as per the requirement of Exports Quality Control and Inspection Act 1963. It satisfies the conditions relating to the quality control and inspection as applicable to it and is certified by export worthy. This certificate is required by the customs before allowing any shipment of goods or by a banker to negotiate the documents. This certificate bears cross references of the invoice or the contract number. Inspection certificate and the inspection can be done by the following agencies. Inspection agency appointed by the Government of India, that is Export Inspection Agency, Textile Committee, Central Silk Board. Inspection agencies may also be nominated by importing countries, government, that is SGS, and OMIC by some African countries. These are some of the official bodies for inspection. Sometimes buyer himself appoints an independent private inspector to inspect the goods. If an inspection is a part of transaction that exporter is required to arrange for necessary inspection, it can be a certificate of quality stating the weight, analysis, or the certificate of origin, COO. It's a certificate that talks about from which country the goods are being imported or exported to. It's a certificate indicating the fact that the goods which have been exported have originated or manufactured in a particular country. So it is a sort of declaration testifying the origin of it. It is normally required by an importer to clear goods from the customs. For political and social reasons, it is insisted by customs authority of importing country before goods are allowed to enter into the country. It helps the importer to take an advantage in the duty concession, if any, for example, goods imported under free trade agreement. Certificate of origin. These are often required to meet custom requirements in the importing state, to comply with banking requirements, and for other official and commercial reasons. There are two categories of certificate of origin: preferential certificate of origin and non-preferential certificate of. The next document is bill of exchange. Very, very important. Bill of exchange is a document drawn and is an order by the exporter to the buyer to pay the money in specified exchange. It is also known as a draft. A bill of exchange is accompanied by commercial documents which are presented by a bank and released to the buyer, either against payment at sight or against a signature for the payment on a specified future date. It is an unconditional written order. So therefore, when import-export takes place, the bill of exchange talks about what is the currency that has to be paid in for the entire order of import or export. When a bill of exchange is drawn on a foreign firm, it is termed as a foreign draft or a bill of exchange. It is prepared either in an international currency or Indian rupees, depending on the terms of the contract. Accordingly, the bill is known by the name of currency in which it is drawn. For example, if a bill is drawn in US dollars, it's known as a dollar bill. And when it's drawn in rupees, it's termed as a rupees bill. Features of a bill of exchange. A bill must be in writing, duly signed by its drawer, accepted by its drawee, and properly stamped. It must contain an order to pay. Words like please pay US dollar 5,000 on demand and oblige are not used. The order must be unconditional. The sum payable mentioned must be certain or capable of being made certain. The parties to a bill must be certain. Then bill of lading. Bill of lading is the transport document associated with sea freight. It is issued by the shipping company or its agent or master of the ship, acknowledging that specified goods have been received on board as cargo have for convenience to a named place for delivery to the consignee who is usually identified. It is a document of title of the goods and as such is freely transferable by endorsement and delivery. What is the meaning of it? It is an official document. Whenever goods are being put onboarded onto a ship, it is an official document stating that the goods have been loaded onto the ship. Bill of lading serves three purposes. Number one, receipt given by a shipping company as goods being described on the document has been received by it or the carrier on board. It's evidence of the contract of carriage by sea between the shipping company and the shipper, exporter and importer. And is a document of title to the goods and can be used to obtain payment or a written promise before the merchandise is released to the importer. It is the only evidence to file a claim against the shipping company in the event of non-delivery or defective delivery or short delivery of the cargo at the destination. So for preparation of bill of lading, the exporter should submit the complete set of bill of lading together with made receipt to the shipping company, which will calculate the freight amount on the basis of measurement or weight. So it acts as a bill for calculating the freight charges also. On payment of freight, the shipping company returns the bill of lading, duly signed and supported by requisite adhesive stamps. What all are the details which are there in bill of lading? The bill of lading contains the following information: shipping company's name and address, consignee's name and address to whom the goods has to be delivered, notified party, name of the vessel which is carrying the goods, port of loading, where it was loaded, and the port of discharge, where it has to unload, shipping marks and numbers, cubic measurements, weights, description of the goods, number of packages shipped on board with date, rubber stamp, gross weight and net weight, freight details, signature of the shipping company's agent, container number if any, shipper's name and address, bill of lading number and date, originals, and the terms and conditions on the reverse of bill of lading. The airway bill. Airway bill is a transfer document associated with air freight. Just like how bill of lading, airway bill is something in relation to air transfer. It serves as a receipt for goods and as an evidence of the contract of carriage, but it is not a document of title of the goods. Hence, the airway bill is a non-negotiable document. It contains the following details: number of packages, dimensions or volumes, gross weight, shipping marks, and so on and so forth. The goods in the air consignment are consigned directly to the consignee. What do you mean by like that? So the goods will be delivered to the doorstep of the consignee. But in case of bill of lading, he has to go to the port where he is supposed to clear it from the port. Then the most important document is bill of entry. The document on the strength of which clearance of imported goods can be effected is known as bill of entry. The form of which has been standardized by the Central Board of Excise and Customs. Every importer has to submit it under Section 46 of the Customs Act 1962. Under the EDI system, Bill of Entry Enforcement Directorate of India. The Bill of Entry is actually printed on the computer in triplicate. Only after out of charge order is given, duplicate copy is given to the importer. The salient features of Bill of Entry is that which is to be presented for clearance of goods for home consumption are mentioned below. Origin and vessel particulars of the goods, value of the goods, duties leviable, code, declaration of importers and clearing agents. Well, bill of entry, the documents required by customs authorities are required to be submitted to enable them to check the goods. B, decide value and classification of the goods. C, ensure that import is legally permitted. Documents presented to customs along with the bill of entry generally include invoice, packing list, bill of lading or delivery order, import license or customs clearance permit, letter of credit or bank draft wherever necessary, insurance policy and certificate of origin. Then those were the import documents. Now let us look at the export documents. Export sales contract. What is an export sales contract? An agreement which has been made between the buyer and the seller, and where the agreement has come into picture and they have agreed to export some goods from India to outside. Stipulating each and every details of the transaction, legally binding document. It reduces the probabilities of disputes and differences as it fixes the role and responsibilities of each party. Export sales contract, the terms and conditions of that. While drafting the sales contract, one must ensure the following: coverage is complete, maximum clarity, future probability to be provided, trade practices, law of both countries, and need of both parties. There should not be any ambiguity regarding the exact specification of the goods and terms of sale, including export price, mode of payment, storage and distribution methods, type of package, port of shipment, and delivery schedule. Following standard terms and conditions are covered in an export sales contract: name and addresses of both the parties, contract number and date, place, description of goods, quantity and quality, product standards and technical specification of the goods, inspection certificate, total value of the contract, terms on delivery such as FOB, free on board, CSR, cost, freight, and CIF, cost, insurance and freight, period of delivery, shipment, part shipment, transshipment, terms of payment, LC, DA, DP, advance payment, letter of credit, okay, like that, amount, mode of currency, and things like that. Taxes, duties and charges, packaging, labeling and marking, brokerage commissions and discounts, licenses and permits, insurance requirements, credits, insurance requirements, certificates of insurance, documentary requirements, performance guarantee, signature by all parties to the contract, remedies, arbitration. Standard export sales contract forms are also available. These can be used as it or with some modification as per individual. Pre-shipment documents. Documents at the pre-shipment stage are those documents which are required to be made till the consignment is presented to the customs department for clearance. And the following documents can therefore be treated as pre-shipment documents: pro forma invoice, confirmed order or contract, letter of credit, pre-shipment inspection certificate, packaging list or packing list, shipping bill, export declaration forms, and ARA. And these documents, pre-shipment, post-shipment stage, are naturally those which are prepared after the shipment. Made receipt, bill of landing, airway bill, roadway and railway bill, post-parcel courier service are received. Invoices including consular invoice, certificate of origin, insurance certificate or policy, and bill of exchange. Documents for availing export benefits. These are separate documents. If you are obtaining any export subsidies or some tax holidays, documents are also divided depending upon whether the benefit has to be claimed prior to the export or after the exports. For claiming benefits, one has to make different applications with various government authorities. Conclusion. Documentation is an essential part of any business to run efficiently and effectively. It helps in avoiding ambiguities and disputes. Documents should be prepared carefully and both the parties should study and refer. So with this, we just saw a gist of all the documents which are required in terms of imports and